I'm Rick Rickert. I'm the owner of Titan Capital Holdings, and I want to welcome you today. Appreciate that you came. And the theme for today is how to profit from real estate without buying it, selling it, or being a landlord. And of course, that's buying a note and being involved with it from that level of investment. Our agenda for this morning, or for this afternoon, is kind of simple and straightforward. It's just note basics, and some of you may be experienced in buying notes, but we want to go through that because not everybody in the room is geared up for really the structure of the notes and how to buy notes. How we create notes, what investors look for in notes, and why buy notes. So kind of starting out the discussion, back in, and we've had this discussion through the office about, investing money in stock market and Wall Street and going through that process. I left corporate America in 1998, and I had a few dollars. I was with the company Inside Enterprises, the computer distributor in Tempe. I spent 10 years there, and they had gone public, and I was able to walk out after investing or vesting some options, and I had a few dollars to invest. And so in that process, I was being courted daily by some guys, who knew how to invest my money and the best place to put it. So I put my money with one of those individuals, and what I realized about 2 years later, when the stock market at that time in 2000, it actually hit an all-time high. The Dow hit an all-time high, and I can't remember the number. I was trying to think back to the numbers, either 11.5 or 12.5 or something around that range, if I remember right. And I was thinking last night, like, what was that number? But I remember looking in the news, or hearing that, wow, the Dow hit an all-time high, and it's really exciting. And at the same time, I went, oh, well, if the Dow hit an all-time high, then I'm going to look at my statements and see where I'm at. And what I realized was I was down $100,000, and that's a tough pill to swallow. And I realized that, okay, there's a difference between what the Dow is doing. And again, my education in college was finance and learning about the stock market and knowing all those fundamentals. So I know what comprises the Dow and the movements of the Dow. It's based on 30 blue chip stocks, and I don't know, at least it was at the time. I don't know if it still is today, because I don't follow it. Because the result of that was I went, okay, if the Dow's at an all-time high and the market's great and all the psychology of everything going on in the market is things are great, but I'm down a substantial amount of money, this investment is not for me. And what I wanted out of that was control of my own investments. I made a decision at that point that I'm no longer going to allow some other professional to dictate my returns and the safety and the control of my investment. So pulled my money out and continued doing my fix and flip and investing in real estate and going through that process. And I started with buying properties at public auction. And then when I went through the process of, okay, I have a finite amount of money, I started leveraging with hard money and doing more purchases at the same time. While you make a little less return because you're servicing the debt on those notes, you can do a lot more properties. So there was something attractive there. And that's how I stepped in and really gained control of my own investments and was really very happy with that decision. So kind of coming back around, and the point of that is, control or no control. Do you have control in your investments? Do you want control in your investments? Buying notes is a very controlled way of controlling your own investment. A little bit of background on Titan. Started Titan Capital Holdings in 2009. In 2009, one of our sister companies, there's 3 companies under this roof. We have Titan Capital Holdings, which is the presentation today, but we also have Look Inside Realty, which is a full-service real estate brokerage, and Infoclosure.com, which is a buying service at public auction. We open up the entire space of buying at auction for investors, real estate agents, and end users. Well, our demand for what we're doing was, we're sending all of our clients out somewhere else to get their hard money for their purchases. And what was happening is some of those hard money lenders were running out of funds. And what I realized was if they run out of funds, our clients aren't going to be able to buy, which is going to adversely affect our business. So we put the infrastructure together, worked with the attorneys, put the infrastructure together to create Titan Capital Holdings and the beginning of that structure. And then we've got some investors to put money in, which then allowed us to lend money. So we've been doing that ever since, and very happy with the structure going forward. We're licensed not only here in Arizona, but we're licensed in Nevada and soon to be in California. We're probably 30 to 45 days away from being licensed to do loans in California as well. And really the whole design is to set up those short-term bridge loans for the investors who need the money for 6 months, 12 months. We are opening up a product that goes out 24 months, but most of it today is still in the short term, 6 months or less. Basic fundamentals of notes, you've got performing notes and non-performing notes. Just the quick basic, a performing notes is one that the borrower is paying based on the terms of the note, and a non-performing note is one that people are not paying on. Over the last 5 years, the rage has been buying non-performing notes. And buying non-performing notes, while it has an unhappy face on there, buying a non-performing note at a really good discount and going through that complex process of foreclosing on it is not a bad thing. What makes a non-performing note not so exciting is if you have it, basically at face value, and then it becomes non-performing, and there's a shift in the market, and it could adversely affect the investment. So what we're opening up today is performing notes. They've been performing notes. They are performing notes, and we anticipate that they are performing through the life of the note. And we'll talk a little bit more about that as we go. Why do we sell our notes? Basic economics. I threw a little economics 101 on here. Our demand has increased. We have more investors and more real estate agents coming to us saying, hey, we need funding. We have a short sale coming up. We want to buy this at auction. Do you have the funds available? And because we can sell our notes, it brings funds back into the house and allows us to do it all over again. So just the basic 101 on that, we sell our notes because our demand is high. If our demand drops or softens, we just won't sell as many notes. So we sell the notes that we know we can turn the money again in a very short period of time. But we won't turn a note just to sit on the cash because it doesn't do us any good. Okay, how our notes are created. Basically, it starts with the borrower. Borrower contacts us and says, hey, we need money. And what we're saying is, great, we'll look at that loan. We're asking for a promissory note, a deed of trust, and they're 20% down. Our minimum requirement is 20% down on any deal, and that's the minimum. We've had many deals we've asked for 30 or 35% down because we just didn't have a particular comfort level with the deal, and so that goes through our underwriting process. Question?
So short-term funding loans you're talking about?
Short-term funding loans, correct. So if you will, kind of a 6-month note, and in the next slide we'll be even more geared toward the 6-month note because we're going to look at the same thing in another way. So basically, the investor puts 20% down, signs a promissory note and a deed of trust, and then Titan supplies the funds for that individual for the purchase. From there, Titan takes that note and we sell it to the note buyer, which in turn puts funds back into Titan and allows us to do it all over again. Now, where it says Note 18 here, in your packet, there's a document in there that shows all the documents that you get as a note buyer, and there's 18 of them. And so I won't go through those in any detail this morning because we only have an hour. And but we could spend really an hour and a half just on that. But as you buy a note, the team will be basically going through that for you and with you, so you know exactly what you've got going through the transaction. Okay, the next slide is just taking a look at the same thing in a little different way. I want to walk you through an example. And we're going to look back at this another time through the presentation. But basically, an investor will come to us and say, hey, I purchased this at auction for $100,000. And our requirement is they have to put $20,000 down, or 20%. So for the simple math, we're basically going to fund $80,000. All right? We valued the property, again in this example, we valued it at $115,000 market value.
As is or after repair?
We will do the valuation after repair, so market ready after repair. So at $115,000, we'll lend $80,000, which is 70% loan to value based on our interpretation of what the value is. Now, the important thing to look at here is what happens with the value in the security. So over time, with their 20% down and the $15,000 of equity built in, because we believe that's what the value is on market today, you've got an extra $15,000 there, so a total of $35,000 in equity. But if that's all done today, over the course of 6 months, as our market is rising, and it is rising, which is very attractive in this investment process, we just did an estimate that it may rise, a couple of percent, and it may be worth at the end of the note $118,000, which makes the $35,000, $37,000, $38,000 of equity. And again, I bring that up and share that example because it's about the protection. if you're on the hook for 80, and that's what they're paying on and servicing the debt on, what's my protection? If I have to take that note over, how much equity is in there such that I can go back to the market? And here's what it comes back to. Because and I'll talk about default in a little bit, but because these would have to go back to auction, that would be the process unless they did a deed in lieu. To go back to auction, this same property was once bought at $100,000 at auction, but now because of the 20% down, you only have to bring it to auction for $80,000 plus whatever they owe you, and fees and penalties and the like. So, the question is at $80,000, $85,000, do we think it's reasonable that we would get that at auction? And I would say yes. And I know the auction space, and foreclosure.com has kind of been my baby for a long time. In the space of buying a public auction, we've bought over 2,000 properties at public auction, so we're very well versed in it over the years. And so we know that space, so we know what the market is going to pay at auction, and there's a good chance they're actually going to pay more. So again, it goes back to the security of this performing note if it goes bad, and that's why I like to use this example to show where's the equity in the deal and where's the security, and that's where it is. Okay, sophisticated investors have a particular criteria, and it's been said that over 97% of investors don't really have a checklist for their investments. And again, I go back to my story that I shared with you at the beginning. There was a time where I took a beating in the stock market, and I was really unhappy about it. And I'm like, I'm smarter than this. Well, I don't know the particular funds and why, the reasons they put it in there, but there's certain things I know. I know real estate, and I need to bring my money back to real estate. So, I even look for myself and go, did I really have a checklist at the time where I gave my money over to somebody and I said, yes, go ahead and invest it with the anticipation of a return? Because there's two things you want in an investment. Number one, you want your principal back, and then number two, you want a return. But I'll tell you, I'll always take my principal back first. So, first and foremost, if I can get my money back, I'll take that first. But, then the question is it speculative on any return or not? Successful investors take one critical step in ensuring their criteria and the decision-making process. And it's this: they look at 6 components. And those 6 components are this. It's safety. What are the risks involved in this particular investment? And a lot of times you just can't see that going through the process. Even, in most public companies or even private, they're going to give you some form of prospectus that you can read through, and they're putting out the risks in there. But you just, it's really important if you're not in control of the investment to know as much as you can about it. Security. Will I see my principal again? Long-term relationship. Does that group or entity have the experience, the knowledge, the management team, such that I can create a connection with, and are they somebody I can trust? Positive cash flow. Is it, again, investment versus speculation? Does it have a favorable tax effect, which our notes are IRA, self-directed IRA qualified, which is really an important factor. Above average returns, the question is, what can I expect on a return like this? So let's break those down and go through them. Buying notes is not for every investor. There is a possibility of loss of income if the borrower stops paying on the note. There's a possibility of loss of principal if the market takes a major adverse turn and the borrower does not pay. At Titan, we've had 4 since 2009. We've had 310 loans, and we only had 4 that went non-performing, and no loss of principal. We've had 2 of those by way of a deed in lieu, and 2 of those we took through the actual foreclosure process. And given that we're kind of in the foreclosure process anyway, on the other side within foreclosure, we're very familiar with it and going through that process. So it wasn't a big deal for us because it's a very structured process going through. But we have a very low default rate, just slightly over 1%.
Does Titan do the foreclosure, or is the note holder do the foreclosure?
The note holder will actually do it, but the trustee on the note is an attorney we've used for many different things in our business, but was on the 2 that we took to auction, was the attorney and trustee for that. So we have him in place because we trust him, and he does a great job and makes it very seamless. So, but yes, the borrower or the note holder, the new note holder, would be going through that process.
What does that process cost?
I'd have to check on the cost of it. Yeah, I really don't want to throw the number out exactly what it is because it happens so rarely that most of the big trustees, like a Tiffany and Bosco, I know they're between 1,700 and probably 2,200 to send a file through. Michael, our trustee, is not that expensive, but I can get you the exact cost, and we can shoot that out in an email because I just don't want to speak for Michael on that today because there are some factors, other than just a number. Probably in the vicinity,
Around two.
around two,
Yeah,
around $2,000. Okay,
the budget, it figured $2,000.
okay.
Depends on where it is.
It depends on where it is. Yeah, there's a lot of variables in that the attorney's going to look at.
Are all your notes in Arizona?
No, not all of our notes in Arizona. We have the majority in Arizona, but we are actively lending money in Nevada as well, and soon to be California. Okay. All right. Our borrowers, borrower qualifications and requirements, they go through a traditional screening and application process. The whole thing comes down to, can they pay the money back, and are they, is the asset a good asset to be lending money on? Borrowers put a minimum of 20% down. In a lot of cases, we're asking for additional funds down if we don't have a comfort level with a particular deal. Property valuations are done in a variety of ways. Most often it's a CMA or a full appraisal. Most of where somebody wants to do a cash out, refinance type loan, we always do a full appraisal at that point because we want to know a little bit more about it. But most of the stuff at auction we're very familiar with, we'll do it through a CMA. The real property is covered by fire and hazard insurance, which is critical in this process. And so we're also named as an additionally insured, which is very important. And that's happened since the inception of what we've done. I think we have had two, actually maybe three, that actually had a fire. And what's great is the check comes here to Titan, and then the process. So it's not just that the borrower gets that check by themselves and goes off and does a thing. That check comes here, and basically to bring the property back to what it should be, we're basically putting that money out kind of in the form of a construction loan, if you will. And if there's anything left over, they'll get the money, but the whole bulk of the money does not go directly out to that investor.
What happens when the note gets sold, so that now someone else is holding the note instead of you guys?
You have to get insurance.
In terms of the insurance,
Yeah.
we're on the insurance as it's Titan Capital Holdings and or assigns. So you're covered by way of the assignment.
When you sell the note, though, you have to transfer the ownership of the insurance, or they have to get their own, right?
Well, no, the insurance it's the insurance of the borrower. So the borrower has the insurance, and we're named as additionally insured, and we're named Titan Capital Holdings and or assigns, and that assignment, that wording, covers the assignee in the note.
So does the note holder have to make that transfer, or can you do it as the note holder? The new note holder?
Well, there is no transfer. You're covered on the policy by way of the assignment that we do.
Oh, so there's no paperwork involved?
There is no paperwork involved on the insurance.
Okay.
Right.
Go
ahead,
ahead,
Al.
add and clarify that. Think in terms of your own home that you own. You own a home and you have your own hazard insurance. That's the same thing. So the borrower owns that home and takes out the insurance, but we require that they list Titan and an assignee. So the insurance is really for the borrower, but then also covers Titan and whoever Titan assigns.
Yeah, I guess my point is, so let's assume that they cancel their insurance, because they can. Normally, Titan's the original additional on the policy, that you're going to get notification that they canceled their policy. If I own the note, I want to get that notification, so how does that happen?
Right.
At the time you buy the note, then we fill in who the assignee is.
Okay.
Yeah.
So then the note
And-
is
and
coming
they-
to you, or then you send it to me, or it goes, or the insurance company knows
We
about
just,
the assigned?
we have the deck sheet from the insurance company, so as the note buyer, you buy the note, then we just notify the insurance company to add you.
Okay, so you're notice, I just want to know who's notifying the
And
insurance
you get a
company.
copy of that deck sheet as well, and you're correct, the insurance company notifies them Titan and the note buyer.
Okay, all right.
Whoever the note
Perfect.
buyer.
So
What
again-
happens when the next premium comes?
Good question.
I'm sorry.
What happens when the next premium comes?
On a canceled,
No, on a renewal.
on a renewal. Well, basically on a renewal, we know when the renewals come up, and so Ashley in the office, who's our loan coordinator and note coordinator, she's on top of, she knows every loan and whether they took a 3-month policy on the insurance or a 6-month policy. The insurance for most of these investments is a little different. We only have 2 different companies that really do these, and so they're very connected with us, so we know when they are. And we've had situations where we call up the borrower and say, listen, unless you're going to make that payment, we're making the payment, we're attaching it onto the loan. So we will not, as Titan, we will not allow that to go uninsured.
So it's the purchaser, the note purchaser's responsibility, and you're gonna make sure it gets paid if they don't.
Correct. Absolutely. Absolutely. Okay, what it comes down to, the last point on this screen, it's the equity position. And you saw the slide before, and actually I think I have it next, which again goes back to this, is it's the equity position. So if something doesn't go right in this deal, there's enough equity in it to exit out of that property. And we always like the 20% down, and we don't like to be over 70% loan to value ever if possible, unless it's a really good, clean deal. Because we want to sell it within 30 days. If we have to take the property back, we want to exit out in 30 days and not be in kind of a revolving process. Okay, key component number.
Back to that for 1 second.
Sure.
I'm a little unclear on one issue. and that
You bet.
is, To go from 100 to 115, is that because of an improvement that's been made by the purchaser of the borrower?
No, actually, let me clarify. The difference between the 100 and the 115 is this. This individual bought this at public auction today for $100,000, but we valued it at 115 because he bought it at a discount. So there's instant equity from the moment that individual bought it. But regardless of that equity position, we still require 20% down, which creates the greater equity spread for us.
And then the next step is what do they do with the property?
Right.
As part of your analysis.
It's part of our underwriting, and in the underwriting, we know our investors, so we know, are they a long-term buy and hold individual, are they a fix and flip individual, are they wholesaling? And so yes, that's built into it because we're looking ahead. And with 20% down, you rarely get, if somebody's willing to write you a check for 20 grand to get into the deal, they rarely don't paint. It's just, they just, and that's
About where they get the capital to do whatever else they're going to do.
well, and again, that's part of the underwriting process. Some of the things that they're looking for is their ability to pay back, service this note and pay back the loan and have some funds available to improve the property. Because again, if they can't improve the property and nothing happens, it's subject to loss, and and somebody else is going to take it over.
In today's market, as I look at the results of the auction of what things are being auctioned for and what the buyer's paying for it versus what the real value is, I'm finding that oftentimes there isn't that much margin there. I mean, they might be paying retail price at the auction today.
No, and I agree with you. And his comment is, hey, what's happening at auction is they're paying close to market. That's true, and we require more down. So we're not going to lend. We don't want to be more than 70% loan to value. So in the event that instead of paying 100, if he paid 113 at auction, and he was going to take this for a rental long term because you can't fix and flip at that point, of course, we'd still require additional funds down. So the buyer would be putting something in excess of 20% down because we do not want to go above the 70% loan to value. But very, very good point. Okay, under security. What's securing this? It's the deed of trust, the promissory note, and we have a personal guarantee on all the promissory notes, which is really important. Title policy, and the notes are serviced by an independent title company. And we're using security right now. Security Title is doing all the title work for us right now. And again, it's about the equity position in the property. Default. In the event of a default, we talked a little bit about that. ARS Title 33 is the statutes that govern this foreclosure process. And they're very boring to read, but they're real quick and easy to Google. If you put in ARS Title 33, they come up, and it's Title 33, 801 to probably about 810, 812, and that gives the whole rundown of what that process is and what's entailed. But you could read that, or you could trust that Michael Tafoya, who's experienced in this, he is the individual we have as a trustee. We were using Bosco, Tiffany and Bosco up to a certain point, and then we switched over to Michael because, one, he's smaller, and we have a little bit more direct conversation. He's a lot easier, and I'm not saying, I don't want to say more pleasant because I know Michael Bosco, and he's a very good gentleman, but they're a big group, and they're a big organization, and we like a little bit more control. Not that we have control, but we like to be a little bit more hands-on in the process. And it's 90 days to auction. So if a loan goes into default, the notice of trustee sale goes up by Michael, and then that sale comes 90 days. It cannot come any sooner than 90 days because Title 33 requires that there's a 90-day period between the filing of the notice and the auction date. And unless you said otherwise to postpone it for any reason you chose to, it will go to auction on that day. Okay, and you're the one, as note holders, who's going to determine the opening bid. And of course, we would go total debt. So total principal, interest, fees, whatever the case might be. Yes, absolutely. All costs associated with it. That's the cost of foreclosing. That would be the total debt. Number 3, long-term relationship. We've got a fantastic team here at Titan Capital Holdings. It starts with Adam Child, who's the president, who joined us in late 2010. Adam is actually in the room, and right in the back corner. We've got Tom Chase, who's vice president of investor relations. We've got Troy Vanderberg, who's also vice president of investor relations with us. Cole Strebel is our branch manager in Las Vegas. We've got Ashley Child, who is our loan coordinator and note coordinator here in the office. And we are licensed here in Arizona, Nevada, and again, soon to be in California. Just taking a step back to Adam, since he's in the room, Adam comes to us from the mortgage business. He's got 24 plus years in the retail space of mortgage. He's got extensive experience in hard money lending through that process. He's done a lot of hard money lending through that time and that his tenure in the business. And so we're very happy to have him on board. He's put together a very strong team to support us. And really it's Tom and Troy who are the ones who handle the note sales and going through that process. So we're really excited they're here. Tom does a lot of work for us here in the Valley, but also down in Tucson. And of course, Cole is up in Las Vegas, and Troy Vanderberg is here in the Phoenix area as well.
And you're the owner?
I'm the owner. Component number 4, positive cash flow. One of the beauties of the investment is you're earning, you put the funds up and you're earning, your next check comes the very next month, which is exciting. And that's not always seen in all investments, but in a performing note process, that's the reality. We don't have prepayment penalties on the note, so you may be buying a 6-month note or what's left of a 6-month note. You might be a month into it. Sometimes they pay off early. We don't have a prepayment penalty. We encourage our investors to pay them early if they can and they choose to, because if they get a turn and it's a successful turn for them, they're right back in doing it again. So we're very encouraging on the investor side to make the lending process easy and straightforward for them. And but I want you to know that some of those, I think our average payoff on a 6-month note is 4 to 4.5 months. Now, it doesn't always happen that way, but that's about the average. Some of the notes may be extended, and so the borrower may say, hey, I'm under contract, I'm right up against my 6 months, can I get a 30-day, can I get a 90-day extension, and we'll grant the extension, just to have them do a successful transfer. Our position as a lender has always been, we want our principal back and our interest. We're not interested in the property. Now, taking the property back for us doesn't scare us, but we're lenders in that mode through Titan. So we're not interested in the property back. We're not hounding them the last day, and we're not creating adverse relationships with our borrowers. We want long-term relationships with our borrowers, as we do with our note buyers, and we just want them to be clean and smooth going through the process. Number 5, a favorable tax treatment. Self-directed IRA qualified, I had mentioned that earlier, which I think is really exciting. Adam's done a great job working with Troy on pulling that all together. We use 2 custodians to move the funds from a self-directed IRA into working through Titan. And Vantage is one company and AccuPlan is another, and that detailed information is in your packet. The second point I just want to drop back to, again, whether this is for yourself or some other individuals, sometimes people aren't sure whether their IRA is self-directed or not, or they know it's not, and they're trying to figure out, how do I get it to a self-directed? Either Tom or Troy is a great contact for you. You would start with them, and they'll help you through that process to, one, get it self-directed, and then get it through Advantage or through AccuPlan to then make this type of an investment. So very clean, very straightforward, not complex, but Troy or Tom are the ones to contact and talk to. And I'll reference their information in the packet in a few minutes.
Do you use these custodians, or can you use any custodian?
I believe you could use any custodian, but these are 2 we have experience with and have worked out very well.
Did Vantage used to be somebody else?
Entrust.
Okay.
So the question was, the Advantage used to be somebody else. We've got people online, and it's Entrust. Thank you. Above average rates of return. The notes are currently paying between 9 and 10.5%. All the notes that we have on the website right now are 10.5%. Now, the reason some of that rate varies is based on the equity and risk in the deal. We have some individuals who come to us and say, hey, I'm putting 50% down, or I'm putting 60% down, or some large amount. I just don't need much money from you. So the risk goes way down. And as a lender on our end, we may be giving some favorable terms for that. And in turn, we're paying out a smaller rate on the other side when we sell the note. So again, lower risk, a lower return. But currently, everything that we have on the website that's available right now is at 10.5%. All right, why buy notes? Again, this is kind of a summary to the process. Why buy notes from Titan Capital? You're in control of the investment, and that's really important for me. As an investor, I'm a little bit of a control freak on my own. On my own things. I like to invest in real estate. I've done a lot of fix and flip on my own. I've borrowed over time. I've borrowed millions of dollars of hard money through some of the other hard money lenders before 2009. And even since then, there was a time we were a little short on money early on, and I borrowed some money, to do a transaction or two. So, but in the real estate and in the borrowing, I'm in control of that investment. And there's no better investment than buying a note, because you're really in control, but without having to do a whole lot with it. Unless it goes bad, and it's very rare, it's still a solid note. One of the reasons why our percentage of defaulting notes is so low is because we have a relationship with our borrowers. And kind of the edict in the business is, never screw over your hard money lender, because there's a bit of a fraternity amongst the hard money lenders. We all know each other. And it only takes a phone call to go, you know what, this guy's slow paying me, or he dropped out on a note, so just so you know. So there's a conversation amongst the hard money lenders as this individual borrower is not a solid borrower. And so it doesn't go very far. So always pay your principal, always pay the interest back. And that's one of the reasons why. But with the relationship with Look Inside Realty and Infoclosure.com, they're buying through another service connected with Titan. So it's kind of a family, effect with the borrowers themselves. So they always want to pay it and make good on the notes. Immediate and consistent cash flow. So again, money comes in the very next month. That's when the first payment comes to you, and every month after that until it's matured. Safety and security. We talked about this. But overall, it's the equity position in the deal itself. And the question is, in 2006, July of 2006, early 2007, should we be buying notes? Probably not. At least not at face value, because that's when the market tanked, and that had an adverse effect on the equity position, which put a lot of notes at risk. This is a great time to be in, and we stepped into the market in the lending in 2009 as things were recovering. 2009, the market was still soft, and I think real estate as a whole still dropped down a little bit. 2010 was a soft year, but we asked for additional funds to give us the protection there. So in a flat market, we were okay. Now we're in a little bit of an appreciating market. Some may argue and say that is something more than a little bit, that it's fairly substantial, and that's great too, because that gives the protection through the equity and helps us reduce the overall risk. It's an IRA-friendly investment, so again, whether it's self-directed or not self-directed, talk to Tom, talk to Troy, and figure out how to convert that over. We've got an outstanding team. Adam's done a great job of putting together all the players in that team. Cole is the most recent member of the team in Las Vegas. One of the gentlemen we've been working with for a couple years up there just retired. And Cole joined us with a whole new sense of energy, and we're really happy he's on the team. We're actually going to be up in Vegas doing our next two seminars, if you will, from Vegas, the How to Buy at Auctions for Infoclosure.com and Hard Money Made Easy, which is another Titan. So if anybody is looking to borrow hard money, we go through the process of explaining how to actually step in and take a loan for private equity or hard money. And again, we'll be doing that. It'll be live here on the TV screens next week, but we'll be live in Las Vegas. It'll be simulcast here. So if you can, feel free to join us. And then short and long-term notes are available. The note, you'll always know the duration of the note itself, and I think we have just a few that are starting to go out to the 24-month, but that's one of the beauties of the investment itself, is it keeps the investment liquid. If you're in a 6-month note, you know that you know, in 6 months or less, I'm going to have that money back, and then I can decide what to do. Do I do another note? Do I do some other investment? But the liquidity is very attractive in today's market. Getting started, very simple and straightforward. In the packet that you've got in front of you, again, they've put a handful of different pieces of information in there, but on the left-hand side is Troy Vandenberg's phone number and Tom Chase's phone number. So the getting started process is very simple and straightforward. It's call one of those two gentlemen. They'll walk you right through the setup, become a member on the site, take a look at what's going on with the notes. One of the advantages of being logged in on the site as a member, registered member, is that we send, when we have a note ready for sale, we send that information out to the members first before, you know, about 24 hours before it hits the public. So it's one of the advantages. If you're really serious about a note, you'll get an email and alerting you to it sooner. So if it's one you really want, you can take that down before it goes to the overall public. Okay. So really it comes down to what questions do we have? And I know Johnny just came in the room and he's probably got some questions for us from online. So actually, let's start in the room. Does anybody have a question in the room?
When those notes go out to your members, does it includes all the information about the property, that's the security as well?
Correct. You'll get, you know, Adam's putting together kind of a breakdown of, you know, over the course of time as we do notes, we're getting used to the questions that people are asking about condition of the property and the insurance and what have you. And so Adam's putting together a packet basically that just answers those questions. So as you know, when you get the email or it's on the website, you'll have kind of a complete profile of the property and the whole deal itself, which again saves the phone call and helps you make a quicker decision.
What are the typical terms that you're loaning
Typical terms we're lending at are 18% no points, and that's typically the 6-month term for what's happening at auction. And then it kind of comes down from there. We've got some 16-2 product, and we've got some 14-4 product, and it really depends on the deal, where it is, what it is, and you know, kind of who's involved. So we've got one that we're working on that's a 4-12. You know, depending on how much they put down, and again, it depends on the note itself and the borrower. So we've got a full spectrum of products.
and when you extend, what happens?
When we extend a note, basically, you know, we're just extending the note. We're just
No more points at that point?
it depends. Again, it depends on the deal in the package. So it'll all depend on the deal in the package. But typically, there's a you know, like a $500 fee for, you know, for the paperwork and cover the admin. But most of the notes, whenever we extend, it's because, you know, and we only extend if they're performing. So they have to be paying, they have to be performing, and you can't do an extension for non-performing. It's not one of the qualifying.
It's non-performing, so it's okay.
Right. So yeah, and if it's performing, you know, it's typically a very short period, either a 30-day just to get through a close, or a 90-day, and that's typically
What do you have the fee? What kind of fees do your servicers have to board the notes from you guys to transfer from Titan to, let's say, myself?
There is no. If you're buying a note from us, there is no fee on the buy.
Well, we just gotta pay the servicer to board the note with them, correct?
No, all the servicing is taken care of by Titan. So your 10.5% is a true net.
Okay.
Good question, but it's a true net, and Titan covers the setup fees and the monthly servicing fee.
Okay. And again, so to qualify that, the question was, as a note buyer, what are my fees? There are none. The 10.5, as Adam stated, is a net to you. Okay. Other questions that we have? Johnny, what do we got from online?
We've got one question from online. What does CMA stand for?
It's comparable market analysis. So CMA is comparable market analysis, and that's typically the comparable or the comp that we're running through MLS. So we'll pull MLS data. We typically do a 1 mile surrounding area. We look at what's sold, what's for sale, and come up with a number. And we're conservative. We're not necessarily going to the high. We're not going to the low. But our whole factor comes down to, if we had to take it back today and we got to put it on the market, we got to be out in 30 days. What's that number? And that's typically the market value that we're working with. All right. Any other questions, Johnny?
That's it.
That's it?
What's
Question?
if there's an extension and the borrower pays that fee, does that go to the note holder or to your company?
No, the fee, the $500 fee for an extension stays with Titan because we're doing the paperwork on the actual extension itself.
What if you didn't want to extend? So you were the note holder and you needed your money.
Well, our agreement with the borrowers is if they need to extend, and that's something we would have to talk about with Adam and Troy and Tom, if we'd have to look at that investment for you, whether or not, because they do extend. So I'm just saying so that it is Titan's policy that we do extend the note when it needs to be extended. So that particular note and its duration may not be good for you, and we'll try to find another one that's better suited for a time frame for you. Adam?
Or you could resell the note if you were the note holder.
Or you could resell the note if you're a note holder.
That's what I was going to say is when you become a note buyer here, like Rick was pointing out, let's say it's up in 4 months, it's not uncommon for somebody to want 30 or 60 days more, but at the same time, let's say you're 3 months into a 6-month note and you need to get out. We'll certainly work with you on that. We'll just make that note available again for somebody else to come in and take your place.
I've got 2 more questions. Is there a limit on the number of notes I can buy?
No, the question is there a limit on the number of notes you can buy? There's not. So if somebody wants to come in, if we've got $1 million in notes on the site and they want to buy all the notes, no limit. You can buy all the notes.
Cash on hand.
Yeah, it's based on cash on hand. Right.
Do you have to be an accredited investor to buy a note?
Do you have to be an accredited investor to buy a note? You do not have to be an accredited investor to buy a note. Yeah, good question. And real quick, whether it's online or maybe somebody in the room, the definition of an accredited investor that has a certain amount of net worth, and I'm not sure what the number is today, and or a certain amount of income individually or combined on an annual basis to be considered an accredited investor. So, and I know that it's, I don't know, is it $1 million of net worth?
200, 300. So
It's $1 million. It's $1 million, not including your own personal residence, the equity in your own residence. So,
or 200,000 single individual income, or 300,000 per American.
okay, or 200,000 single individual in annual income, or 300,000 is joint. Okay. Very good. Other questions, Johnny? We have any more from online?
That's it. No.
All right. Gentlemen, the process of getting started is easy. I want to thank you for coming today. But Troy and Tom are both very qualified individuals. That's Troy right by the doorway there. His card is in your packet. Or I'm sorry, his phone number is in your packet. But you can meet him on the way out. And Tom is available to us as well. Tom is in Tucson right now on a simulcast. So we have people in there as well. In your folder, or one of the ones that you picked up, were our upcoming events for Titan and Infoclosure, the how to buy, additional how to buy notes, but how to buy at auction is one of the events for Infoclosure, and then the hard money made easy if you're looking on the other side as an investment as well. So again, thanks for coming in today. Appreciate all the questions and the interaction, and there's probably some extra pizza out there, so please grab that on your way out.